Nigeria engineer an economic recovery. Africa's largest economy also needs a lot more funding to develop. That's why a Nigerian business delegation is in China this week to drum up funding. Is that a hard sell? Well, I spoke to Dr. Ibe Kachukwu, who is Nigeria's Minister of Petroleum Resources, to find out how the fundraising is going.
The trip has been very rewarding. Before we embarked on the trip, we had done basically what we call a gap analysis of what infrastructural investments and funding required to get the oil industry in Nigeria up to sort of top level that I'd like to see it be at. And we had looked at figures in the level of about 50–60 billion dollars over a period of 5 years. Well, the MOUs that we signed while we're here is averaging about 90 to 100 billion. So we exceeded our expectations. The reception was extremely wonderful.
And what's the upside for China?
Upside is that you're investing into a sector that has one of the low-cost production, oil production costs in the world. And people like Sinopec and Sinop, who have gone in as the frontier force, getting in investment very early, have seen the sort of rewards they have compared to others. The second is that it's completely virgin territory in some form, so a lot of infrastructure needs are required. China is looking for areas to invest in infrastructure, get adequate rewards, and also provide work for its people. So that's an advantage. And the third, obviously, is that the return rate in the Nigerian capital market and investment sector is higher than most places in the world. I think it's probably one of the highest in the world. Return rates of in excess of 15 to 20% per annum. So from a point of view of return, from a point of view of opportunities, and then from a point of view of low-cost environment, I think Nigeria provides a very unique selling opportunity to Chinese investors.
You were an OPEC president, and also Nigeria is an OPEC member nation. So what do you think of the oil market dynamics so far this year? And where do you see oil prices heading in the second half?
We welcome whatever increases we see. We work hard to keep those increases firm and stable. And this year they haven't behaved too badly. I'd like to see those figures, like I said, trend into the mid-50s for the end of the year, and hopefully into the lower levels of the 70s by the end of next year. Over and above that, I don't see that happening. The trajectories are not showing very rapid movement back to the $110, $120 per barrel days anymore. In terms of market stability, we are seeing a bit more of that. Some of that caused by sporadic calamities in some member countries and others, including Nigeria when we had our militancy issues. And some just by a little bit of tightening of the American supply market by virtue of the inability of shale to continue to grow at the pace it was because of the cost of production. We need to focus on how to drive our own costs dramatically down and take advantage of the fact that we still remain the least cost producer.
About 2 weeks ago, Nigeria floated its currency, the Naira, which promptly fell about 30%. It's currently stabilizing, and 2 months ago, China and Nigeria signed a currency swap deal. Is that going to help stabilize the currency?
It certainly will help. I think the less pressure you put on the dollar, on the search for dollar, the more stability you're going to get in the Naira. I think the initial reactions, whenever you pull out the leads on currency controls, is sort of what you saw 2 weeks ago. It's beginning to stabilize. We expect it to grow stronger, but really there wasn't much of an option in terms of which direction to go. You could not get enough investments when people see that there are two exchange policies that are working, one seemingly favorable to certain investors and the others disfavorable to other investors. So I think this, taking off the lead and letting the thing float was the right decision to take.